life, your term show.
Okay, we are live with Mr. Hart Togman, Mr. Rental Real Estate, Mr. Property Management. You're doing a lot of stuff these days, man.
Yeah, Mr. Panda.
Mr. Panda, yeah. So is the property management, is it called Rent Panda Property Management? Is it all under the Rent Panda umbrella?
Essentially, yeah. Right now, this minute, it's Grove Rentals. In about 2 months, it's all going to be Rent Panda. So we're amalgamating everything. It'll all be clean.
And you're still doing tenant placement exclusively if somebody's interested in that?
Yeah. So the whole model of Rent Panda is services and products for landlords throughout their life cycle.
Okay.
So if you're a landlord, you just need somewhere to post a listing. Rent Panda has a marketplace, just like Facebook Marketplace, Kijiji, all the others. And you can post there. You can use some extra tools. That's a side hustle, essentially, of the business. Then we provide leasing services. We provide full service property management. And we also do some paralegal, some coaching, some education. And so the bigger picture is anything that a landlord needs throughout their life cycle, because typically you go from doing it all yourself to wanting to do nothing yourself.
Yeah.
We've got something for you.
Okay, cool.
Yeah.
How does your platform work in terms of posting ads on there? Because I have seen that and have been curious about it.
Yeah, it's just free to list. You can book showings on there, screen tenants, build your leases. Transparently, that was where we started as a business, but we migrated away from it as the core business. Because ultimately, and we've talked about this before, but real estate is a people game, right? It's a people business. People want more hands-on service, white glove service. So we moved into that leasing and property management game because ultimately everyone wants to be an investor, right? You don't want to be a landlord. And so getting good software still keeps you as a landlord. We want to move them down that line so that they can focus on investing.
Does that platform actually get attention from tenants, like looking for rentals on Rent Panda?
It depends on where you are. So if you're posting in Thunder Bay, yes, for sure. We're like match for match to Facebook at this point.
Wow.
As you come further south in the province, it's less and less of a natural place for people to look. Mm-hmm. People still use it as a tool, but that's kind of why we moved away from it. And there's a lot more people in the game. You've been in the rental game a while. Apartments.com is in the scene now. They're going head to head with rentals.ca. Live.rent is coming over from Vancouver. So the marketplace dynamic is quite saturated. So we're not pushing that anymore. We're really focusing on how to provide the best white glove service for landlords.
Okay. What is it? Apartments.ca?
Apartments.com.
Apartments.com.
Yeah.
And rentals.ca, sorry.
Yeah.
And the other one you said, live.rent?
Live.rent, yeah.
And they're competing for multifamily?
For everything.
Rental platform?
Apartments.com and rentals.ca push multifamily quite heavily because that's where they can make the most money. Mm-hmm. But they do everything. So, if you go to the States, like Zillow and apartments.com are the biggest platforms and they carry 80% of the weight. Facebook still plays a part, obviously, but apartments.com, I think about 6 months ago, decided to come into the Canadian market and started pumping millions of dollars in advertising into their takeover of Canada. So I think rentals.ca has a strong competitor emerging, and it's likely that in the next couple of years, there's going to be a shift in where people are looking.
What about viewit.ca?
My personal opinion of viewit.ca is just that it's a bit of a legacy platform. I probably found my first rental on viewit.ca. It was very Toronto-centric.
Yeah.
And they haven't done much to really keep up with the innovation in the industry.
Kind of looks like Craigslist, like back in 2010, like, you know how Craigslist just eventually gave up. They just stopped updating the website.
Exactly.
Like Kijiji had taken over from them at that point.
And it says, circa 1999 probably on there. But I think there's a lot of marketplaces that unless they invest heavily and innovate, they're going to be left behind. And just like the US market, it used to be heavily fragmented, which is what we are right now. And we are very likely to see amalgamation of those platforms. I would expect apartments.com to come in and start buying up platforms, start amalgamating them all. Rentals.ca has already done that, across a few platforms. So
what did they absorb?
They absorbed a lot of software, like behind the scenes companies, and I forget the names of them, but their syndication network is a bunch of sites that they've purchased. And so you think you're on, whatever it is, renttoronto.com, but really it's just another platform owned by rentals.ca.
Okay. So I thought that Zumper had done that a few years ago.
Zumper had also done that. Yeah.
Because they took like PadMapper was, I think, the biggest one, but they had other platforms. I forget the names now that they, had merged or bought.
Yeah. And it's better for them to purchase and keep those brands just so that they kind of dominate the SEO market as opposed to purchasing the brand and killing it, and then people will go to those competitors.
Okay.
So there's a lot of names out there, but there's not a lot of companies from an ownership perspective that control the market.
Okay. So I used to post on Zumper all the time. I used to post on rentals.ca. I used to post on Kijiji, and I used to post on Facebook. And I stopped all of that. And I exclusively get my listings on Facebook and or sometimes the MLS. And I'll have an agent post it for me.
Yep.
Because I find that's where all the demand is.
Yep.
For serious tenants. So I won't bother with Kijiji. I won't bother with Zumper. I won't bother with rentals.ca. Maybe if it's like a Toronto condo, which I haven't done in a long time, I would consider Zumper or rentals.ca. Like how would which platforms would you post on in certain areas?
So that's the key. In certain areas is really
because it is local.
Yeah. And so when we're working at scale across the province, so we manage and list from Thunder Bay to Niagara, from Windsor all the way out to Ottawa, we really have to do it all in order to not miss anything. So if we have a listing in Sarnia, yes, Zumper isn't going to get much traffic there, but it's just easier to have a syndication partner, which is what we do, and post everywhere. And we don't even have to think about, whether Sarnia is differently affected versus Chatham versus Tilbury versus London down the road. We're just on all of those platforms. So across the board, Facebook still gets a ton. The MLS still gets a decent amount. Kijiji is actually quite impactful in a lot of tertiary markets still. But we just have to kind of be everywhere. And now we're up to like 12 or 13 platforms that we post on with paid ads on those platforms, just so that we can be seen by everyone. And you probably know this. I mean, the odds are your lead is going to come from Facebook, but that one lead may come from Kijiji, or that one landlord may have had a good experience on Zumper 3 years ago. And so to service them, they want to be there. So you have to be there. Yeah. And ultimately, when it comes down to placing tenants, if something isn't going right as a company with a service that claims it's the best out there, you have to do everything to leave no stone unturned. Yeah.
So what do you think about the MLS then? Because I noticed they actually post to Kijiji. So do they have they must have some sort of partnership with Kijiji.
They may. I'm not aware of that.
Realtor.ca, I think, too, because I get leads coming in that see it on Realtor.ca, aren't working with an agent, but reach out to the ad. Yeah,
so Realtor.ca for sure. And what typically happens with an MLS listing is other platforms or other people on those platforms will actually scrape that listing. So if someone sees a listing on MLS and they want to get some tenant leads in to maybe represent them as an agent, they may take your listing and post it on Kijiji. I don't know that there's a direct partnership there.
I've seen that, yeah. Guys will do that on Facebook too.
Right. Exactly.
I actually saw my listing being advertised by somebody else, and I reported the guy.
Yeah.
And I messaged him like, "Hey man, like, I don't know what I said to him, but I'm like, I sent like I don't know, not a friendly message.
Yeah.
And he goes, "Hey man, I'm just advertising your thing to get tenants to come."
Right.
He's like, "You reported me, like what the hell?"
Yeah.
And then he got super pissed at me, and then I was like, "Oh crap, man, I'm so sorry. I thought you were a scammer." So I had to go and find out how to like delete my review on his Facebook Marketplace thing, and I felt bad after, and like I jumped the gun.
But that's very indicative of the market that we're in and why MLS is more attractive these days for landlords to post. The market is tighter. Obviously, more agents in the mix who are not making sales. The buy and sell market is not hot these days. And we are also shifting towards more and more of a rental economy. So as people look to make money by representing tenants and representing landlords and getting into the rental game, more and more people are going to be looking on the MLS, both or on Realtor.ca, both represented and unrepresented. More agents who are hungry for business are going to take your listing and post it out saying, "Hey tenant, I'm going to represent you for this listing," right? They don't actually own the listing, but they're going to come to you now as the owner saying, "Hey, I've got these 5 qualified tenants. Will you pay me a half month's rent to bring them to you?"
Yeah.
So people are generating their own business. And I think it's a product of realtors more so are getting into the rental game. Whereas when everything was screaming hot, no one wants to make $1,000 commission on a rental when you can make 20 grand commission on a purchase.
Yeah.
That's the way that the market is going right now.
I felt like I was like trying to get crumbs off the table, like being the guy to rent out the listings because I wasn't licensed. I'm like, I can make $1,000 here, $2,000. Like I'll take the crumbs off the table that you don't want. You know?
Yeah.
So I think you're totally right. I actually saw a stat that I think for the first time in Ontario ever, there's more lease listings or more leases were done. I think, was it completed or just are posted? There was more leases completed by agents than purchases and sales through the MLS system. To your point of both of the renter economy, picking up as less and less people can afford to buy, and agents now pivoting, obviously, because of the times with less and less transactions happening right now with rates.
Yeah, 100%. And the Toronto condo market is driving a lot of that. A lot of this inventory is being pushed over to the rental sector. And it's being done at the small landlord level and at the institutional level. There's large swaths of condos that are being purchased and pushed into the rental sector. I think there was an announcement last week or the week before that there's a partnership between a large-scale hedge fund or developer and the government. I forget if it was municipal or provincial, to actually purchase a lot of these condos and put a section of them into affordable housing and then rent out the rest of them.
I saw that.
Yeah, there's a clear need for more rentals and a soft buy and sell market.
I thought that was, I haven't read into it at all, and I'm not informed on these policies or anything, but I thought it was kind of a clever thing, actually. Like, the government keeps saying they're going to build all this affordable housing. They're not, because they're the government. They just make shit up to get votes, and they know nothing about building. And if they did build, it would be horrible, and they'd overspend and build nothing, basically, which is what they've done for like 10 years now. And I'm like, well, all these, units are built. People need homes. They want to do this affordable housing. A bunch of condo developers want to be bailed out because they can't sell all these condos. I'm like, this is actually a clever idea on the surface. Now, I haven't looked into it, so maybe I'm completely off here.
I mean, time will tell. But I think ultimately there is inventory out there, right? Whether it's, there's inventory of roofs for people's heads, right? And whether or not it's inventory that you're going to sell to an end user, you're going to sell to an investor, or you're going to sell to an institution to make it into rentals, or sell it to the government to make it into rentals, that inventory has to move somewhere. And so I think it's a good use of that right now. It may be a little bit reactionary, but I think anything that we're seeing today is a product of what's happened over the last 5 to 10 years. Right? Nothing happens quick in the Canadian system because of bureaucratic involvement. But ultimately, there was a hot time. There's inventory to sell. Now it's got to be used, or else someone is going to go bankrupt real fast, and probably a lot of people. So time will tell. Yeah,
interesting times.
Yeah.
So you think these? So I don't know. For the average person listening to this, they're mainly based in Southern Ontario with their investments. So I think Facebook Marketplace probably still the king.
Yeah.
Is that fair to say?
It's fair to say. Yeah.
Okay. Get on maybe MLS if you can, maybe, and then any other platforms do you think are seriously worth being on?
Yeah, I mean, I think it's worth doing a test. If you're a seasoned investor, or you're even someone that's got a listing or two that's going to be relatively consistent, every year or two you're going to have to list, you should try, right? You should try 4 to 5 different platforms, because there's also some platforms that people just can't tolerate. If you go on a platform like View It, and you're like, I'm not going to pay $75 and I hate the interface and it's just not worth it for me.
Yeah.
And you don't go on and you don't respond to messages quickly because you hate the platform, then View It's not for you.
Yeah, that's right? Kijiji for me.
Right. And the only one that is outside of that is Facebook, because everyone is going to hate Facebook because the damn is it still available button. And we're going back to our podcast from 4 years ago, probably. But everyone's going to hit is it still available? You got to be on Facebook. There's a ton of leads that happen across the province on Facebook. But otherwise, explore the platforms that work for you and then make a decision, because there's going to be leaders like Facebook, like the MLS. Those leaders may change over time. Keep up with the news. But if you are in general, Hamilton, rentals.ca does decently. Right? If you're in St. Catharines and Welland, rentals.ca as well. Kijiji, maybe a little bit. Zumper, not so much.
Yeah.
But there's just so many out there right now that it's worth exploring them and diving into them, and create an account, spend an hour or two on all of these platforms and see which one is going to work for you.
It is a bit, nuanced. You're right. And funny enough, the one rentals.ca tenant that I actually put in a property was in Welland, of all places.
Yep.
And I was always surprised by that. And
right. But if you go up to Thunder Bay and you say, I posted on rentals.ca, good luck. You'll never find a tenant.
Yeah. So if you're in Thunder Bay, definitely check out Rent Panda.
Yeah. And Facebook.
Yeah, for sure.
Yeah. But I think we are in a much broader scale in a much more balanced market. And we can talk about this probably for the entire podcast, but the balance of the market means as an investor, you have to work harder to find your tenants, to find your quality tenants, to manage those tenants. It's not a hands-off game anymore. And so there's a lot of dynamic with this balanced market that lend themselves to more work. Yeah.
Balanced or favorable to tenants?
So
or just more favorable to tenants than it was, but it's actually, when you zoom out, just balanced.
Yeah. So at a high level perspective, we are in a balanced market where rent to income ratios have finally come down to a healthy level.
Yeah.
10 years ago, what's the rent to income ratio that works? 30%. Everyone knew it was 30%, right? You don't spend more than 30% of your income on your housing in general. That drifted, and 18 months ago, that was up to 42, 45, 50% in some regions. There was numbers that were coming out in Toronto where people were spending 60, 70% of their income on housing.
Really?
Like it was completely unaffordable.
These are actual stats?
Yeah. And when you looked at, we actually did some of that data ourselves because there wasn't this information on the neighborhood level. And to be a single individual living in Toronto, it was completely unaffordable.
Yes.
It was impossible as a single individual earning a decent income in Toronto, even $80,000, $100,000, to have a one-bedroom apartment on your own. You're spending 90% of your income on housing.
The amount of like zombie relationships and unhappy relationships where boyfriend, girlfriend stayed together, partners stayed together just to afford housing.
Right. And when, owners, when it's an investment strategy to take a 1+ den and put a curtain on the den, and that's your second bedroom, that's indicative of an unhealthy rental market and an unbalanced rental market. Investors
others might say creative.
Fair. It is creative, but do that now and see what happens, right?
Oh,
see what quality of tenants and
you'll be on blog TO just getting roasted.
Exactly.
Yeah.
And, when you look at a balanced market, a seasoned investor is happier with a balanced market because it's predictable. And what we saw over the last couple of years is crazy high rents, insane demand, not great quality of tenant, but just overwhelming demand so that rents were just pushed and pushed and pushed. And a lot of people got into real estate investment because of that. And so when you look at a balanced market like we are right now, we're at healthy income to rent ratios. We still have strong demand. Like there's an underlying current of strong demand, even with immigration cut by whatever the number is, 50, 60%, even more. But the investors need to be choosier with their properties. They need to work harder to advertise their listings, and good listings will still go. Bad listings won't go in 60, 90, 120 days. They'll just sit forever because there's enough inventory to keep them sitting forever. But when you look at being a savvy investor, it still works. We're still buying properties. You can still cash flow on properties in Ontario. You can't in Toronto, obviously. You can't within probably 500 kilometers of the center. But property values are dropping to healthy levels. You can still find affordable properties to convert affordably and find quality tenants to rent them out. But we just can't get greedy, and we can't get overly hungry so that we're going out there and buying everything under the sun with money that frankly is too cheap. So yeah, I think it's a balanced market, and the movement that we're seeing towards the next year of being, rents are still dropping, but they're not dropping as aggressively as they were, and they will flatten out. I think that's a healthy market to sit in for the next year or so to reset everyone's expectations of what investing in real estate should be.
Yeah.
Because
and what it was for a long time.
Exactly.
Yeah.
And
it's no longer super easy mode. It's like average mode again.
Right.
Yeah.
And I mean, there's a lot of different paths we can go down here, but a lot of people are taking a knee-jerk reaction to say, well, my property was cash flowing because rents were insane, and now it's not, so I'm getting out. I want to sell the place. And it's difficult to sell a property right now. And they're stuck, with a rental that's vacant and a property that they can't sell. But their rent is too high, and they're not coming to the reality of rents are not unhealthy. They just were incredibly high.
Yeah.
And you can still have a healthy rental. Maybe it's not cash flowing. Maybe it's not cash flowing as much as you would have wanted. But making a smart purchase is the key to making a long-term healthy decision. And everyone is forgetting the fact that real estate is not a 2-year game or a 3-year game.
Yeah.
If you think about everything in decades versus years or months, it all still will make sense.
Yes.
Maybe that's a bad prediction, but I'm very confident in saying that if you're holding a property for 20 years, losing $50 or $100 or $200 a month on a property right now during a downtime is not a bad thing.
Yeah.
All right, baby. Are you positioning your future on yesterday's financial system or positioning yourself for what's coming next? Because this is bigger than a housing cycle. The economic system itself is shifting, and the gap between people who understand that shift and those who don't is widening fast. On Saturday, April 18th in Mississauga, the Your Life, Your Terms event brings together a full-day deep dive into what's actually shaping your life right now. You'll hear how money quietly influences society, politics, and your rising cost of living. You'll see a clear breakdown of the great economic phase transition into AI, energy, and a coming wave of liquidity. You'll get a fact-based look at what real investors around the Golden Horseshoe are doing right now to generate profits. You'll learn how to structure wealth intelligently using corporations and trusts so your legacy is large and intentional. You'll walk through a live interactive workshop on taking custody of your digital capital, and you'll see in real time how artificial intelligence can level up your life, your business, and your investing starting immediately. This isn't about incremental improvement. This is about understanding the operating system of the new economy so you can thrive. Past attendees have called this the most important investing day of the year. Many have said one idea alone paid for their ticket many times over. Seats are limited. Pricing increases as we get closer. Every year, this room fills with people who act early. So here's the move. Pull out your phone, go to yourlifeyourtermsevent.com, look at the agenda, and decide, are you just living life inside the system or learning how it actually works? That's yourlifeyourtermsevent.com, Saturday, April 18th in Mississauga. Rockstar members get in free. Yeah, baby, yeah!
Or even if you just go back, 5 to 10 years from now, it's like most property values are up, rents are way up, and things have kind of worked out for investors that have bought. Even in Toronto condos, which is the market that's been the hardest hit for many reasons, right? If you go back 10 years, investors that bought in 2016, their condo values, I saw the stat, was like up average still 160,000. Now, if you bought peak, it's down maybe about 160,000.
Right.
So it just depends when you bought and how long you're in the game. And once again, it goes back to time in the market instead of timing the market.
Yeah.
Right. So if you did buy peak, I mean, don't get me wrong, that sucks. But at the same time, if you just zoom out, take a longer term perspective, then you're right. Over the long term, things tend to work out. However, especially with condo investors, if you're seriously bleeding cash, and super negative, it's not sustainable for your life, then, something has to change. You got to get a tenant in there if it's vacant.
Yeah.
You got to sell it if you can, whatever. You got to make the moves that make sense to stabilize your own life and cash flow.
Yeah.
But you're right. It's a long-term game.
Yeah. And I think thinking about it, pulling it back to the start, let's say I have no properties. I'm an investor that wants to come in. It feels like doom and gloom. Everyone is talking about how rents have gone down 17 months straight now. But at the same time, if you start from nothing, just as an example, and you look at what markets right now are good, solid investments, you are probably in the same situation of 20 years ago where downtown Toronto may not be a good investment, right? And Barrie 20 years ago was a great investment. And lots of people that I know personally have made a lot of money off of owning real estate for 20 years in Barrie. But Barrie now is not Barrie then. You got to go a bit further because everything has grown over the last 20 years. So Thunder Bay is a great example. And I hate to talk about Thunder Bay just because it's my baby where I like to invest. But Thunder Bay, Sault Ste. Marie, North Bay, as you come down, Sudbury, these are all markets that are manageable to buy an investment property, to cash flow quite heavily, and to hold an investment for 5, 10, 15, 20 years and have very solid numbers for that entire duration. And that's what people were doing 20 years ago in Barrie. That's what people were doing 10 years ago in Belleville. That's what people were doing 8 years ago in Welland. And so it's about finding the right opportunity for you, not just following the trend of, 5 years ago, people made fast cash in the Toronto condo market and that's gone. So now it's all doom and gloom. So Thunder Bay is a great example where we just recently purchased a single family home off an estate. The house cost $225,000, roughly. We've put about $75,000 into it. So 300 all round numbers. We just listed that property a week and a half ago. We turned it into a duplex. So basement is a 2-bedroom, upstairs is a 4-bedroom. There's a lot of students in Thunder Bay. There's a lot of young professionals who were students during the crazy immigration boom and are now staying there as young professionals. There's decent industry. It's not a heavy appreciating market by any means, but it's a stable rental market and potentially even growing quite aggressively in the future. We rented out the upper for $2,650 and we rented out the lower for $1,600.
Nice.
So we've got
To students?
Yes and no. So the basement, it has some young professionals, the upper has students, but lots of the inquiries were across the board. We had families, we had students, we had young professionals. We had pretty much everyone applying to these units.
Were these like, let's say, local Sudbury people, or were they more so immigrants that had come there in the last few years?
A lot were immigrants. There was some locals, but I would say 80% were immigrants in the last 5 years for sure. So the rental economy is still driven by a product of this crazy boom that was the immigration cycles over the last 5 years.
Yeah.
But thinking about investing $300,000 into a property that's grossing over $4,000 a month, that's netting over $2,000 a month after property management, after vacancy, after everything in there, repairs and maintenance. That's something that still exists in Ontario. So there's a lot of hype about moving to the States, and a couple of years ago it was getting out to Alberta, and a few years before that it was getting out east. There's still healthy markets in Ontario, but you need to think about where to look, and you need to run your numbers correctly with the experts at the table who know what they're talking about.
Yeah, but Hart, Ontario doesn't really exist outside of the GTA.
For sure.
I mean, it's kind of all about us here. So like, Sudbury, is that even Ontario?
Right.
Where is it? That might as well be in Nunavut.
And I'll point something out. I don't know any long-term investor that manages their own property. And this is not a pitch for property management with us, but most people get scared about buying an investment property because they want to manage it themselves. And I get it, right? You want to have a tangible asset. You want to touch it. If something goes wrong, you want to be able to get in the car and drive out there. And usually for people, that's like a 2-hour sphere.
Yeah.
But as people grow, all of a sudden 2 hours becomes, an unhealthy amount of time, right? People in Toronto bought in Welland, and now they've started to get property management because they're like, it's not worth it for me to drive out there.
Yeah.
And then you grow some more, and Hamilton is as far as you'll drive. And then you go some more, and Mississauga is as far as you'll drive. And so whether or not your property is in Welland or Tilbury or Windsor or Thunder Bay, setting up a system so that you can have hands-off investment is smart from the get-go, because if you go down this path, you will get there. And even if you only want 1, 2, 3 rental properties, it's smart to run a model where you have property management in place. And property management is not completely hands-off. Passive investing is probably throwing something in a REIT or in a safe GIC or a stock. You still have to manage the managers, and you will go through good and bad property managers, but it's a much more passive approach, and it can be a healthy way to get into a balanced market that makes sense in the long term. And
Yeah.
I always say this to our inner circle, but each house that we purchase for me is something for my kid, right? So my kids, we were talking about this before, let's call them 3 and 1. They're close. One house is kid number 1's college fund, right? Second house is kid number 2's college fund.
Yeah.
House number 3 is kid number 1's wedding fund, and so on and so forth. And I'm talking 10, 20 years out. Even with a market that's heavy cash flow and some appreciation, I don't care about a 2-year investment. I want a 10-year investment at least.
Yeah. Well, let me tell you, I'm saving for my wedding fund right now. And
There you
I had, nice house in Sudbury I could offload and
Yep.
pull some cash from would be nice right about now.
Yeah, for sure. And at this stage, we're still in a cash flow generation stage of our investing. You talk to a lot of people out there, other balanced markets, multifamily is doing great right now. There's lots of good deals. A lot of people, just like every established business right now, boomers are getting out. People who are bleeding cash for a long time have had enough and they want out, and new blood is coming in. And so there's a ton of multifamily deals out there, and savvy multifamily investors are buying heavily right now, just like the institutional investors. And so you have to look at your market correctly, and no one in the multifamily game is taking a knee-jerk reaction approach to buying multifamily. It's a big investment. And so you run your numbers right. You understand your markets. You understand what markets are workable now and which are not. And you look at, is that market going to be workable in 5 years and 10 years time? You make some educated guesses, but I think we're in a much healthier space that I'm happy to operate in as a service provider, because we're not on this hopefully we're not on this roller coaster. And hopefully we're on a little bit of a flat plane. And we can stay there for a little bit of time so that people's expectations reset.
And back to long-term trends.
Yeah, for sure.
Yeah.
That all being said, I do think we are poised for another housing crisis.
In terms of lack of supply over the next few years?
Yeah. So everyone asks, when's it going to turn, right? When are we going to get back to the good old days of rents skyrocketing in the GTA?
Hell yeah.
And
those days were nice.
They were nice. Unfortunately, I wasn't investing heavily then.
Just printing money.
Yeah. Right now, there's an oversupply in the market, right? So to be fair to your point beforehand, we are in a tenant-heavy or tenant-driven market. Tenants are out there, quality tenants are out there in the GTA, negotiating rents down, playing people against each other because they've got 4 or 5 options of where they can go.
Is that nuanced though? Because if you're priced right, I don't find that it's like tenant-heavy. I just find like if I'm priced right, then I have the leverage, or it's balanced leverage, or whatever, right?
But that's always been the case.
Yeah.
Right?
It's just people they anchor at higher prices. They anchor and they don't want to lower.
Exactly. When you push the envelope to higher prices, you get people who are smart tenants saying, hey, I really like your place. I get why you're trying to push. You put in all the nice fixtures, you put in the quartz countertops, but I can get the same place and maybe it's a granite countertop for $200 less. So come on, strike me a deal, right? And so you get
totally, yeah.
But if they look at it and they go, this is a great deal, they're going to jump on it.
100%.
And so, priced appropriately is always the name of the game.
Winning move, yeah.
Yeah, whether you're buying, whether you're selling, whether you're renting, and we speak from the same tune. It's a conversation I probably have 20 times a day.
It's just reality. It's like facing reality.
Right.
Like you got to
the price is what the market will pay for your place.
Exactly. So that is always the price,
right.
What the market will pay you.
That being said, we're in a tenant heavy market because there's an oversupply, right? We are the product of the trends over the last few years. Money was cheap. People were making money hand over feet. And so more people got into real estate investing. At the same time, you have these developers that started these condo developments and these purpose-built rental developments 5-10 years ago. All that supply is now getting dumped on the market. So there's a lot of supply right now.
In what though?
Purpose-built rentals are out there. 1-bedroom, 2-bedroom places are out there. We can talk about kind of the asset class that's still doing really well. But ultimately, there's a lot of rentals right now. In the near future, that will not be the case.
In which locations as well?
Right. So I would say as a broad strokes statement,
sure. On the
Southern Ontario, there's an oversupply of rental listings.
Okay.
Right now.
Relative to the last few years.
For sure.
Yes.
Relative to, 2015, no, not so much. But relative to the last, even 5 years, there's an oversupply. And a lot of that is pushed by the condo market and the purpose-built rentals that are dropping on the market. All that being said, we're at this perfect storm where immigration is down. All of this supply is dumping on the market, but that will not be forever. That is likely to be a year, 18 months, 2 years max, because housing starts are at an all-time low. I think the number was a 30-year low. So as these cycles go, everyone is investing, and now everyone is dumping the supply into the market. Now no one is investing and no one is building. And so without those housing starts in a few years, all of that supply is going to be sucked up, right? It's likely that Canada will open its doors more aggressively than it is right now. Maybe not 1 million people a year, but it will start to open its doors more aggressively. And that surge of immigration will come back. And that will lead to another housing crisis. That will lead to another spike in rents. And as most people settle in the GTA will be most affected by it. So we are now most affected by the dramatic drop in rents, and we will be most affected by the dramatic surge in rents that will likely happen. So all of that to say is...
It's more volatile?
It's more volatile.
Yeah.
But as an investor with a 10-year scope on the market, it's still a healthy market to be in.
Yeah.
Because yes, we may be at the bottom for us investors in terms of the rent coming through the door, but the basic fundamentals of the demand in the market are still there. And the lack of housing starts will create a housing shortage in the next few years. We don't know exactly how long that will be, but if you're looking at a 10-year horizon, it doesn't matter whether it's 18 months or 24 months, right? Yes, you may bleed a little bit more cash, but just think about it as if your boiler goes out, right? Think about it as a repair and maintenance fee or increasing your vacancy cost. if you build that into your numbers at the start, it makes sense. And that's why the institutional investors are getting into it, because they can bleed for longer than the small investors. And they know that the fundamentals are there. So they can hold out and they will win the most when this surge comes back.
Mm-hmm. I remember when I bought my first rental property, I had to partner up with my buddy. Mm-hmm. We were 23 and 24 when we bought it. And it was like, we just scraped together like the minimum down payment we could. Yep. And we bought it. And it was slightly negative cash flow. We did a rental. And so like our cash flow was higher than it would have been as just a straight rental, but we were still slightly negative, counting maintenance costs in that inevitably come up. And I remember thinking about it back then, like, okay, I'm willing to dump $100 in a month or whatever I have to, as the maintenance costs come up through the year, $100 here, $200 there, because to me, this is like kind of investing in like an RRSP or a TFSA. Mm-hmm. Like I'll dump that little bit of money in just so I can get my foot in the door. And that's how I kind of thought about it back then.
Yep.
Now, later on, I had like 3 variable rate mortgages that all went up with the rate spike. And then it got a little too hot for me where I'm like, okay, now I'm dumping a little too much that I'm comfortable with for my monthly cash flow in some of these properties. And so I sold one, that was negative cash flow that worked before the rate hikes, didn't work after the rate hikes. Mm-hmm. And so I offloaded it. And so I think it just, it matters your personal situation. Like these institutions, to your point, like they can just dump all kinds of money in it because they have huge pools of capital, long-term price horizons. And it's not like a family who has to decide between, okay, do I want to dump $500 in this negative cash flow property or do I want to have $500 more for little Timmy's, little league? Right.
And I think people were purchasing without even thinking about a negative situation that may come up. So when you could borrow money at 1.5%,
I got a 1.2% mortgage at one point. They offered me 1.6 and I was like, can you do any better?
Right.
And they said, we can do 1.2.
Right.
And I should have gone back, can you do any better?
Right.
But I took the 1.2.
Right. And so, but you probably didn't run your numbers with an 8% mortgage.
No.
You're like, it's never going to be that.
Yeah. I didn't foresee that at all.
I got a 6% mortgage probably only a few years after that. And when we got that 6% mortgage, the deal was so good that we're like, we don't care. And we actually locked in, I think it was a 3-year fixed, because we're like, the numbers work and we don't know if things are going to shift towards a 7 and an 8 and a 10. It's likely to go down, but if the numbers work at 6, I would rather have a sleepless night than a few extra bucks in my pocket if the rates drop. And the rates dropped again, but the numbers still work. And that property, we're actually just coming up to our mortgage renewal or maybe another year or so. But we'll get a better mortgage and we'll make a bit more money on that place. But throughout this whole time, it's worked. And looking at the 10-year numbers, they're not massively affected by 3 to 5 years of a bit less money. And so if you run your numbers very conservatively with a worst case scenario and it still makes sense for a long-term buy and hold, then you're solid.
Yeah.
If that's not your strategy, then maybe you need to pivot strategies in the short term, or maybe you need to look at something else to generate some fast cash. And that's just the reality of the market that we're in. It's not easy, but there are definitely ways to still make money.
Yeah. Yeah. I think it's important to say like, it's not as easy. Mm-hmm. Like it's back to what real estate investing was for a long time.
Right.
It's just money got so cheap and asset values got pushed up so high. Even, from 2010 onwards, you could even say certain markets, right? Other markets didn't boom until later on. Yep. Like let's say Niagara, for example, I think didn't start ticking up until about 2016 time,
right?
Where I am personally. And so it's like, it's back to like, you got to put some effort in, right?
Yep. And with 10 to 20% drop in sale prices and home values, we're seeing markets come back up that didn't make sense beforehand.
Yes. Yeah. We're seeing that too. Like we're seeing single family homes come up.
Yep.
There was one in Hamilton that cash flow as a single family home.
Yep.
And we're like, oh my God, if you could find this in 2021,
right?
And if we're back to like, let's say, 2021 price levels, maybe it depends on the market, whatever. Mm-hmm. But it's like, do you know what would have happened to this property in 2021?
Right.
But the numbers work so much better. And like, so it's just psychology, right? Of the market. And we have to work through the glut of investors coming in so hot.
Right. And I think looking at where we've gone from a legislative perspective and a policy perspective, we're in a much better place to make better, smarter, and more impactful decisions as investors. So as an example, if you looked at that Hamilton single family home or that Hamilton duplex conversion 5 years ago, 10 years ago, you wouldn't even been thinking about another ADU on the property.
Yeah.
Right. You wouldn't, in Toronto, you wouldn't be thinking about, 4+1s. You wouldn't be thinking about 40 unit developments on major streets. Like the densification, the change in densification allowances that have happened over the last 5 years because of this shortage of housing has set us up for a healthier market, a healthier investment marketplace. And I think a better opportunity to spread out our investments across various markets that can work for us in the long term. Mm-hmm. And if we just remove our Toronto blinders, there's a lot more out there that can add value to our lives.
You mentioned a few minutes ago there we can talk about an asset class that is doing really well right now. Mm-hmm. So what were you referring to?
In short, 3-bedroom units.
And where?
So in most markets, but very true in Toronto, and then less and less true as you get further out, because things, like I mentioned before, Toronto is volatile. But as you get further out, things kind of pacify a little bit. And so the disparity between, 1-bedroom vacancies and 3-bedroom vacancies kind of moves away. But over the last 17 months, rent has gone down. Fine, doom and gloom. But 3-bedroom units in the GTA are the only asset class that has grown in rent in any month of those 17 months. It's still down. But last month, as an example, I think 3 bedrooms went up by 0.6%. Doesn't sound like much, but when 1 bedrooms are going down 3 to 4%, it's significant. And what that's showing us is that in these urban centers, or just outside the urban centers, people are looking for homes, right? People are not, it's not this massive wave of immigration that's coming in, that's renting, 3 people to a 1+10, 500 square foot Toronto condo. It's families that need to rent because affordability has been an issue for the last 10 years plus. Families need to rent. Young professionals who want to grow the families, groups of young professionals, even student groups, they're looking for better homes. And a better home is somewhere where you have space, somewhere where you have parking, somewhere where you can actually live for a longer period of time versus kind of this transient 1-bedroom pop around approach to life. So we're seeing 3 bedrooms or even 3+1s doing very well, holding their value. And a lot of builders have moved their models to these 3-bedroom units. Yeah. So they're picking up lots for, $800,000-$900,000. They're putting up 4-unit buildings, and each unit is a 3-bedroom, or each property is a 3-bedroom unit. And so those are models that we didn't see even 3 to 4 years ago. Mm-hmm. And I think those trends are here to stay, especially if you listen to a lot of the analysts out there, like Dan Folk is an awesome one that talks about how Canada is showing all the signs of moving towards a renter economy. Yeah. Right? We're showing all the signs, just like European countries, of more and more percentages of the population renting long-term or for their entire life. Yeah. So creating homes that people actually want to live in is, again, important, which again is balanced. It's healthy, right? We shouldn't be creating 2-bedroom units that are 420 square feet.
Yeah, dog crate, shoe boxes.
Right, because there's a gym downstairs and there's a co-work area, right? Like people want to live in their homes now.
Yeah. Well, imagine that.
Yeah.
Yeah, to your point, even in these tertiary markets or secondary markets where I'm often helping investors find tenants, I get happy when it's a 3-bedroom unit because I'm like, it just appeals to way more people. Right. Families, students, young professionals, even just like a couple, but they want more space because one of them works from home. They want an office. They want a spare bedroom. Yeah. They want to have room to have a kid down the line. Yep. It's just, it appeals to more people.
And I think, people talk about the lack of demand, and I think the demand is there, but the demand is pickier. And so people are not willing to go into the 3-bedroom place, and the 3rd bedroom they walk in and it's the size of this desk. Yeah. Right. And it's like, oh, well, the engineer who did the drawing said that you could fit a crib in this corner.
Yes.
It's like, but do you actually want to put your kid in that closet? Right.
Yeah.
And they would rather spend less or spend the same amount, get into a slightly older building that's larger so that they can have a family. And so the demand is there, but it's pickier. And so you have to create homes that people actually want to live in. And a lot of the conversions that we saw, especially in like the Niagara region, the homes were weird. I don't know if you found this, but a lot of tenants will come in and you hear the comment weird often, where just like the layout's a bit weird, or, the kitchen's over here, but the fridge is like off in another room or under the stairs. And things just feel weird because a couple of years ago, you could hack a house together and it would cash flow like a monster and you'd rent it out in a week.
Yeah.
And that's not the case anymore. And so, sacrificing a little bit of, efficiency in your designs for building a home that people actually want to live in, thinking about how they experience that home, that's really important.
Yeah, I've definitely seen much better design conversions than other ones. And the much better ones obviously do much better.
Yeah.
And maybe more money went into it, or maybe it's just higher quality finishings. But those things tend to pay off over time in terms of ease of finding tenants, ease of managing it, less turnover,
Yeah.
better quality tenants, people willing to pay more over time, right?
Yep.
Like it makes sense to make a product that people actually desire.
Right. Which ironically was not the case a few years ago. Like, it was pretty unique.
Yeah, yeah.
And so I think if we continue down that trend, it should be better. And when we hit that next housing crunch, hopefully, like with these institutional investors, with more investment in purpose-built rentals, we will have the housing stock to actually accommodate it.
Okay, so this is such a vague term, purpose-built rentals. And I hear it all the time. And I personally wonder, like, what are these purpose-built rentals? Are they big apartment buildings? Are they like little 8plexes? Like, are they investors, doing a 4plex, 5plex? Like, what are all these? I know it probably counts all of those, but what's like the majority? Like, what's actually coming on market? Like, I know in Edmonton, for example, a bunch of investors have jumped in and doing all these 8plexes and stuff in Edmonton. That's like a recent local trend.
Right.
So yeah, what's your opinion on these?
Yeah, I mean, when the media reports on a purpose-built rental, it's typically a large-scale apartment complex.
Okay.
Right. If you think about the 80s, when, I think I'm quoting it right, maybe the 70s or 80s, but the majority of apartment buildings in Toronto around the periphery were built then. And if you live in an apartment in Toronto, it's likely that it's a 70s or 80s build, and it has a certain style to it. Those parquet floors and the big windows with the sliders on the bottom, and they're usually either 1 or 2 bedrooms. There's very rarely ever a 3-bedroom place. And these purpose-built rentals are managed by large-scale property management companies. They're investor-built and managed. That is what is typically referred to in terms of purpose-built rentals.
Yeah.
In Toronto, you've got like Fitzrovia right now building a ton of these complexes. There's one up by Yorkdale as a new hub. There's one, I think it's DuPont and Dufferin, another 800 unit complexes, like massive complexes of purpose-built rentals. When you talk to CMHC, you've got them surveying purpose-built rentals of 4 units or more. So when you actually look at the numbers of purpose-built rentals, you've got a purpose-built 4plex. So it's someone who's created that building, that envelope, that structure for rentals specifically. It's not a converted single-family home, duplex, triplex. But a lot of them are 8plexes. A lot of them are 24plexes. So there's small multifamily, small purpose-built rentals. But usually when the media talks about purpose-built rentals, it is large-scale apartment complexes.
Yeah. Okay.
Yeah. And what we're seeing is, again, a Toronto dynamic, but the large towers are primarily being built in Toronto. Or when you look at the demand, if immigration starts to surge, if our population numbers start to grow, a large percentage of that population is going to come to Toronto and the GTA, and they're going to want this type of housing. And it's generally transient housing, right? So you're in that 1-bedroom, 2-bedroom apartment with yourself, your spouse, maybe one kid for a defined period of your life, usually not a very long time. And then you move into home ownership. Yeah. Versus if you look at something like Hamilton, there's a lot more, secondary rental market assets in that, city, where it's conversions where, a blue collar family is going to live there for 10 plus years, or there's going to be lifelong renters who move between rentals, but they're going to live there, full time as a home. And we're seeing that as densification increases in certain centers, there are more towers going up. Like if you look at Kitchener-Waterloo, even Hamilton is a good example where more and more of these towers are being built, but it's heavily focused in the GTA. In a lot of the tertiary markets that we're seeing, there's a lot of opportunities for small multiplexes.
Yeah, the infill development.
Exactly. The 6s, the 8s, the 4s, those are doing really well. But when you get really far out, let's say Sault Ste. Marie as an example, or Thunder Bay or Tilbury, you get to a point where it doesn't make sense to build multifamily because land is cheap enough that it actually just makes sense to buy another single family home. So we went through this exercise where, we've got a single family home. We turn it into a duplex. It's in, GTA terms, it's a cash flow monster. It's netting over $2,000 a month. And Toronto investors who see that are like, this is a huge part of land, like plot of land. Why don't you put an ADU in the back? And, you could put a garden suite on there for $250,000 and it'll gross you an amazing amount of money. Well, the house next door we could buy for $180,000.
Yeah, got it.
The duplex down the street we can buy for $320,000. And so a lot of the times it doesn't make sense to build. It doesn't make sense to densify when you get really far out, because it just makes sense to buy the next plot of land.
Yeah. Whereas in Toronto, you could make the case. You could say, it's going to cost me $250,000 or $300,000 to build that garden suite, and maybe that's like comparable to a condo. Mm-hmm. You could buy a condo down the street for $400,000.
Yeah.
Or you could build an ADU in your backyard,
yep.
a 2-bedroom for $300,000.
Yeah.
It's like, that's a much better value purchase, because it's much more desirable than living in another one of these condo units, right?
Yeah. And I mean, the forced appreciation in a market like Toronto is going to be that much higher. And we actually just rented out a coach house, and it was, downtown-ish, and it rented out for still $3,700 in this market. Mm-hmm. And it rented within a week and a half, 2 weeks. And so again, it's a house that people want to live in, right? It's got parking, it's 3 bedrooms, it's a house, but it's that densification and that forced appreciation that the owner was going for.
Yeah.
He built it a few years ago, but those models still make sense in Toronto. But again, you have to look at what asset class makes sense for you as an investor, what asset class makes sense for the market, what market do you want to be in, what are you comfortable with, and make those decisions.
What I'm realizing from talking to you, because we've been talking about how Toronto is more volatile, mm-hmm. and I think Southern Ontario in general versus the rest of the country, like mm-hmm. it booms the hardest, and maybe right now it's corrected the hardest. Yep. Ontario and BC have had the biggest corrections, but after the biggest booms for decades now. And this is like a Bitcoin reference, so allow me if you will. Yep. But this guy, Michael Saylor, he talks about how Bitcoin, its volatility, he's like, volatility is vitality. Mm-hmm. And that's how he positions it. Like, it's because it's this interesting asset that it goes through these crazy booms and busts, because it's the most interesting thing. Like, a young kid is volatile, right? Because it has so much growth potential.
Yep.
What's not volatile? Like a grandma, like living, an 80-year-old grandma isn't volatile. Because the growth is done. Like an old established company like Xerox printers isn't volatile, but Amazon is, because of the growth potential. And so it's kind of the same thing. It's like, it's the most interesting thing with the most potential. Like, Toronto's a growing international city, like one of the great international cities around the world. And so it makes it more interesting, but it makes it more volatile.
100%. I mean, as an investor, are you someone that would have invested in Tesla stock from day one? Or are you someone that would have invested in Xerox, right? Or are you now like, okay, I'll invest in Tesla because it's safe, right?
Yeah. Or do you want to balance?
Right. And, personally, as a real estate investor, being in the property management space, being in the leasing space, I'm so heavily invested as a business owner and an individual in this space. I want my real estate investment to be slow and safe, mm-hmm. right? I want that model of 20 years ago, where I buy a house and that's my kid's college fund.
Yeah.
Right. But there's a lot of people that don't want to be in real estate investing for that, right? There's fix and flippers that have made a ton of money and continue to make a lot of money with, volatile markets and high appreciating markets. There's a lot of condo investors that made a ton of money on that volatility.
Yeah, but taking a big downside risk.
Right. And they're taking that risk. And so I think the trap that we fell into a couple of years ago was people believed that the condo market was safe and it would never react to
and no events. Numbers were considered, no cash flow numbers. What if I buy it, close on it? What if I can't close on it? And then what if I do close on it, but then there's no buyer because I was never planning on actually keeping it and renting it out.
And developers were making those mistakes too, right? There's whole developments that didn't get off the ground or now sitting on dead inventory and are figuring out what to do with it because of that. But the developers have a higher risk tolerance than you or I as an individual investor. And that's why you're 100% right. That's why institutional investors now and the government is coming into the game, because they have the deep pockets and the long bandwidth to play a highly volatile game over a long period of time, which eliminates the volatility. Because if you look at real estate, wherever it is over the last 50 years, it's a very, very shallow line, right? And it's always going up.
Yeah.
If you zoom in, there's going to be some massive wild dips and spikes, but it's slow and steady. And if you can play it long enough, that volatility evens out. But if you're in it for the short term, you're going to feel that volatility.
Yeah. Is the real estate going up or is the money going down? Maybe a bit of both.
That's a topic for another day. But
Yeah, that's a different topic.
yeah.
Okay, cool. What about students? Because I've had some units recently in St. Catharines. We were trying to rent them out, find good families, good couples, whatever. And it was a bit slow. We weren't finding the people as fast as I would have liked. But I kept getting students reaching out. Now, these landlords had never rented to students before. These were Brock University students. And they were asking, how does this work? Like, what's the lease cycle like? Like they just had no idea. And so we actually pivoted to renting to a few students in some of these units because that's where the demand was. And these were, in my opinion, the best quality tenants. And I like students because you get them all in one lease agreement. You get parental guarantees. You've got 3 students plus 3 sets of parents backing up that money.
Yep.
And they're just kind of trying to cover their small chunk of that shared rent, which is let's say $600 a month for them out of the shared rent. So I like it. And so we pivoted and the landlords were happy with that. And I was just finding good demand with that. So what are you finding with students in different markets? There's a lot of headlines, maybe less so now, but of all the international students being cut and student rentals are dead.
Yep.
The market's blown up. All the student rental investors are screwed. And we're sitting back okay, maybe if you bought some 8-bedroom home beside one of these crazy private campuses that were offering these programs and they were just low-key ways to get immigrants into the country and benefit off these international students. But if you're by these established schools, we have not seen a drop in demand around Western University, around Brock University, Queens, McMaster.
Yep.
So what are you seeing with students?
We're seeing the exact same thing.
Okay.
So ultimately, you can never listen to the headlines. You have to talk to the people on the ground.
Yeah, exactly.
And if you have an 8-bedroom rental in Toronto that is, or let's call it in the periphery of Toronto, not to mention specific cities, and you are relying
You can say Brampton.
We can say Brampton. Okay. And if you have a student rental.
It's my home, man. We can bash it as much as we want because I spent 27 years there. I reserve the full right to talk about Brampton any way that I want.
Speaking in your voice, because I'm not from Brampton. Speaking in your voice, if you've got an 8-bedroom, 16-person rental in Brampton, you are going to be suffering.
Yes.
Because the massive drop in international students coming to the country is real, but a very, very large majority of them were going to these Mickey Mouse colleges.
Yeah, because think about it. There's no school in Brampton.
Right.
There's Sheridan College.
Right.
There's a Sheridan College campus.
Right. And if you talk to Sheridan College, they will probably say that their international student enrollment is down. But when you look at the finite number that is, it is not enough to impact you as a student rental investor in that area.
Yeah.
So yes, if you jumped on that bandwagon and you tried to make a lot of money way too fast, you are going to feel it now. You may think about pivoting that strategy. We still invest in student rentals up in Thunder Bay because there's Lakehead University and there's Confederation College, both of whom will say their international student enrollment is down, and it's down significantly.
Yeah, but then what percentage of their enrollment was international students?
Right.
Because it could be 10%, 15%.
And even with those cities, it was relatively high. Speaking as someone who's invested and whose business started in Thunder Bay, I'll reserve the right to say Thunder Bay probably brought on too many international students and new immigrants for the health of the city.
How dare you?
Yeah, I know. But there was just not enough housing to accommodate it. And when you go to Thunder Bay, there's a lot of Brampton-esque situations that are happening and more DoorDash and Uber Eats drivers than you've ever seen because these kids don't have a way to make money.
Yeah.
And they're trying to make money and they're trying to live, but there's just not the infrastructure to support it. That being said, we're still doing quality student rentals there. And when you look at London, when you look at Windsor, when you look at Kingston, all of these cities are still doing well when it comes to the fundamentals. And so if you have a good quality student rental and you're running your numbers correctly, you can still run a good student rental business. And we still are. But again, the demand is pickier, right? So those high quality students, we just filled ones in the upper unit. They were asking a lot of questions. They needed to be handheld through the situation. They were asking for $50 less in rent, right? The quality students still understand that there is more supply than there used to be. But we still filled it. We ran our numbers at 2,400, I think it was, and we filled at 2,650. So there's still an opportunity for growth, even amongst the specialists who put their numbers down, but we did it conservatively. So it's still a really healthy market. And I think it's a boring, healthy market, right? Student rentals, again, over the last 30 years in Ontario have been strong.
Yeah.
These universities are not going to go under anytime soon. And these universities, I would argue, have more lobbying power than a lot of other entities out there, right? And they can come together. And I used to work for an entity that did lobbying for the universities. They have a lot of sway when it comes to political advocacy. So when the policy makers sit at those tables and decide who's coming to the country, what those numbers are, I would bet that the universities are at those tables. The substantial colleges are at those tables.
Uber Eats might be at that table too. Tim Hortons.
Uber actually
DoorDash.
is at those tables, yes.
I feel like Timmy's, DoorDash, Uber Eats, and like Conestoga, Mickey Mouse colleges are like running our immigration system.
Fair, yeah. But my bet as a student rental investor is that lobbying pressure will push for those numbers to increase.
Yeah.
So that's just my bet as a student rental investor. But we see it all the time, and we see it still doing well.
Yeah, we'll follow the money and the incentives, right? Just the international student tuition. It's just so large.
For sure. And I think it's easy for people to get excited about sexy volatility. And the name of the game for me right now is, again, it's not doom and gloom. It's back to basics. And those basics also include, as an investor, making sure now is the right time that you have your systems right? If you made some money, just spray and pray and buy this and buy that and sell this and sell that and rent out to whoever at crazy market rents, now is the time to take a step back and say, what's going to work over the next 10 years for me? And play a safer game, or choose to play that volatile game, but choose it knowingly and build the systems that will work for you, build the team that will work for you. Take the time in a slower market to get the fundamentals right again, because we're likely to stay in that healthier, slower, stable market for a longer period of time.
Yeah. I think we're working through a lot of over leverage. I think just leverage is being wiped from the Canadian real estate system a little bit. We're just getting some leverage wiped outs, which is normal in any market, like a stock market, Bitcoin market. Like what happens with Bitcoin in particular is all these people buy with leverage. And then as the price dips, price correction, because whatever event happens in the world, leverage starts getting wiped out, and then positions start getting forced sold. And then there's a bunch of forced sellers, which creates more forced sellers, and it wipes all the leverage from the system. And it's like a forest fire, like clearing it all out. And then you grow back from that point. And it's kind of happening, I feel like, with Canadian real estate right now.
For sure.
Where like a lot of us, myself included, was over leveraged with the easy money when the easy money turned to harder money. And I was like, okay, over leveraged for this state of the market now. Let's cut some of that leverage out and kind of try to grow from a more stable base again. And it's just the name of the game. When money's 0% and everything's going up like crazy, like you feel like an idiot for not investing. And I mean, you are missing out. There's a huge opportunity cost. And then all of a sudden when rates changed everything, obviously that wiped a bunch of that out. But now we're seemingly leveling off, right?
Yeah. And I mean, as a buyer, as a real estate investor, 75% of the deals that we've done over the last 18 months have been, taking advantage, not in a bad way, but taking advantage of other people's over leverage or opportunities that have come up that wouldn't have come up in a hot market. Right? Prices are down. People are trying to get out. People over leveraged. Banks have taken back properties. Estates that would normally pass on to next of kin don't want it because they can't handle the debt burden that's there. And so they're trying to, offload those properties. We've done some amazing deals on properties like that.
Interesting. Okay. Because there's still a mortgage on it.
Some of them have a mortgage on it. Some of them, just don't want the upkeep. Like this last property that we purchased, there was some fire damage. There was a lot of work that needed to be done. $75,000 isn't an inconsequential amount to put into that property. Even if it was paid off for, the sons and daughters of those who were passing it on, they may not have $75,000 to put into the place, and it needed the work. You could not do anything with it without that work. So
and maybe with prices not ripping like they were, there's less incentive to hold it as well. I hadn't thought about that.
And there really wasn't an appetite to hold it.
Yeah, because maybe you had a lot of like accidental landlords that were like, well, maybe I should hold on to this thing. Like it's gone up.
Yep.
You know, their parent passed away and it went up their whole lives, and now this thing's worth a lot of money. And
Yep.
maybe I just hold on to this thing and keep it as an asset, and I'll learn how to rent it out or something, right?
Yeah. And not to speak badly of other investing tactics, but other things are hotter these days, right? People are talking about precious metals. People are talking about Bitcoin. People are, thankfully NFTs are kind of moved past, but there are other things out there that are hotter right now. And so, if that next of kin is thinking about investing, maybe they're into Bitcoin. They're like, do I hold this dilapidated rental property
That I have to
that
put
I just
money
got, that I have to put money into, that I'm going to have to deal with tenants, or just hold this empty place,
Yeah.
or let me sell it and invest in something.
Yeah.
It's a smarter move for them, and it's a great opportunity for us because we get a deal. So everyone's won on those cases. So for us, diversifying is important, and we've got a bit of diversity, but as an investor, for me right now, it's about picking up those deals that are slow and low burning and long-term investments.
This is funny. So yesterday we were in Cabbagetown, Toronto, filming a YouTube video with Victoria Suen.
Yep.
And she had she was the architect for this project. It was a single family home turned into a fourplex. And this home was built, I think, in 1880.
Yep.
And so big century home, it had like 2 extensions had been put on over the years at some point. And this owner was living there, and the contractor and Victoria were telling us on the YouTube video just how crazy it was. Like it was just deferred maintenance for like 50, 70, 80 years that just hadn't been done. And like the ceiling was being held up by an aluminum ladder that the guy had like tied ropes to.
Nice.
And there was a leaking like ceiling and skylights and stuff. And he had this crazy just rigamajig plumbing system where he had the rainwater coming into a bucket and then tubes like leading it outside. Yep. And they're like, it was a complete disaster. There was dead rats and squirrels living in the walls. There was alive rats and squirrels living in the walls. Yep. This guy had just lived there in this massive home, and there's like birds flying around the home. Like it was absolutely crazy. But they passed away, I guess. It passed down to the next of kin, and they were like, we have this home. Incredible location, just like on the street with a few century homes, and then just surrounded by condos, right? Like everything had been built up around it. And so they decided to convert it to a fourplex because it didn't make sense a few years ago, but now they had this home and they just fully gutted it and had to put support beams and kind of do all the work and stuff. But now it's this amazingly cash flowing fourplex, generates over $10,000 a month. I think it was just over 11,000.
Yep.
I haven't rented it out yet, so those are projected rents. But they're projecting one of the units, which was a 3-bedroom, 2-bathroom plus a den, to just crush it. Yep. Because that, to your point earlier, unit does not exist in Toronto. Right. And it was this incredible location where you could have a family and be right in the thick of downtown, work your downtown job, walk to work, and have this 3-bedroom unit. Yep. And unique from all the different condos around it, where you have to wait for an elevator to get to the 12th floor, and maybe 2 of the elevators are broken that day and you're waiting to get up. Right. Where it's a walkout. If you've got a pet, you just walk your dog. You're in this like kind of cool established neighborhood, just a different type of unit. Yeah.
And that's a perfect example of there's an opportunity in every market for every style of investor. Yeah. Right. That person, it's going to need more cash than our Thunder Bay property, right? For 75 grand, you're not going to be able to do that.
Yeah, yeah.
But the right investor will have the pockets and the leverage to do that type of job. Yeah. There's the institutional investors that are buying up 100 condos.
Who are these institutional investors you keep referring to? I haven't heard about this.
Yeah, I mean, I don't know the names, but there's a number of investment firms out of the U.S. that have always had their eyes on Toronto that are starting to come up.
These mother U.S. guys?
Yeah, yeah. And there's local guys that are developing.
Because they're cracking down on that in the States, like Trump, I know, was talking about, I don't know if anything passed, but wanted to cut down on like Blackstone buying up single family homes and stuff.
Yeah. But to like a point probably an hour ago, but there's inventory, right? And something has to happen with this inventory. And we're not in a market where it's just going to sit empty forever because money isn't cheap anymore.
So are they buying like condos and just turning them into rentals?
Yeah.
Okay.
They're buying condo blocks.
This isn't like single family homes.
No, I mean, there are those that are doing that.
Yeah. I don't think it's as prevalent here.
No, but what's happening now because of the dynamic that happened is developers built these condos for end users and investors. I think it was, what was the number? 80% of every new condo development was being sold to an investor and turned into rentals. So all of a sudden, when those investors, the market softened, the numbers didn't make sense anymore. People were walking away from deposits. People were, just closing and then trying to get rid of it. Can't close. All of that inventory is now sitting there. So what does the developer do with it? They can take it back. They can drop price. They can get into the rental business themselves, which some are doing.
I've seen that, yeah.
Or there's, a US hedge fund or some firm that comes up.
And they'll eat the negative cash flow.
Yeah, but because they're getting rid of the inventory, right? They can't just sit on that inventory forever. And if it was a quick dip and then it's going to spike again, they would have held on to it.
And they're easy to manage too. It's not like a bunch of single family homes and like it's a condo. It's less work to manage.
Maybe. Speaking as someone who's managed multifamily, it can be difficult.
Okay.
But it depends, right? It depends if it's purpose built. It depends how the systems are set up for that condo. And a lot of these have to shift their strategy because they were set up as condos. They've got condo boards. They've got condo amenities. And yet a large percentage of the building is now being turned into rentals. A big proportion is going to be affordable rentals now. And so the dynamic in a lot of these buildings is going to change. So it'll be interesting to see what happens over the next few years. But my point is that the inventory is there. There's housing stock that needs to get eaten up, and it's going to get eaten up by someone. And our guess is the next 12 to 18 months, it's going to be rental inventory.
Mm-hmm. Yeah. Changing real estate market.
For sure.
I wonder if people are sitting around in like Rome, like 2,000 years ago, talking about the real estate market and just how things are changing.
Were. Yeah, they probably were. And I think the safe business to be in these days, I always say, like, people may say that property management and leasing has been relatively safe and stable. Like COVID was a great time for the business because things were renting and rents were high, and properties will always need to be managed. But I think the service-based businesses that are servicing all of these properties, the plumbers, the electricians, the HVAC guys, these are the companies that are doing incredibly well now because rental inventory is harder on the envelope of a building than homeownership, right? Homeowners will typically take care of their stuff a little bit better and push along, other than that house that was, had rainwater buckets flowing out to the windows. But
he was taking care of it, just, in his own style.
Yeah. But the wear and tear on this inventory is going up. And so these companies, we're seeing it on our end, a lot more service-based companies and trades are working with property management companies to service this new supply of rental housing.
Interesting. Yeah. So because you're much more likely to hire it out than go fix it yourself as a landlord.
For sure. And if you're an institutional investor buying up 200 units, even if you're a smaller investor buying up 20 or 30 units, or just buying one or two, it's very likely that you're having hands-off management, and that management company excels with, quality trades that can sustain our whole portfolio. We've looked for cleaners that can service all of Ontario, because we don't want 20 cleaners on our roster that we have to deal with. We aren't doing it internally. So we want a provider out there that can be at the same scale as us.
Interesting.
Right? If we have an HVAC provider that can service the whole province, any property that we are servicing, we call them up and they give us better pricing, which means better pricing for our clientele. And so I think the whole industry is kind of moving towards that now. And we're seeing the start of that kind of aggregation of services.
Oh, cool. Yeah. Okay. Is there anything else you want to cover?
No, I think that was it. I mean, I think the big thing you pointed out, it was your point, not mine, but pricing is key. And the fundamentals of rentals and real estate start with pricing. And a lot of people have their head in the sand because they rented the place out at X 2 years ago, and prices have always gone up in their head as real estate investors. And so now it should be X plus one, whatever it ends up being.
Yeah.
And it's not the case anymore. And like I said, demand is pickier. And so getting your fundamentals right starts with pricing. Mm-hmm. It is not a bad market if you're conscious and realistic about your pricing. You can still move properties. You're moving them. We're moving them. You can get quality tenants. You just need to get your fundamentals right.
Yeah. And at the end of the day, it's worth what the market will pay you.
Exactly.
So if the market's not paying you anything, you might want to change the price.
Yeah. And so many people will say, well, this platform's not working for me. What platform are you using? And the first question is, are you priced correctly?
Yeah.
Because I don't think it's the platform. It's probably the price.
My advice to people is always like dial in your ad as best as you can.
Yep.
And then price is the only lever left.
Yep.
Like if your photos are great, your description's great, everything's, as good as you can possibly make it.
Yep.
Well, then the only thing you have left is to play with the price.
Right.
Which is a beautiful thing because then you just tweak that dial up
Yep.
or down, and that's what's going to get it done.
Yeah. And I mean, whole other podcast about AI, but with the AI tools out there now, even compared to a year ago, probably when we talked.
Yeah, great point.
There is no excuse for bad photos, non-virtually staged photos and
Yes.
bad rental listings.
Agreed.
Like it is an absolute baseline that all of that needs to be there. You could take the crappiest photo of the crappiest unlit space and just throw that into ChatGPT. Maybe not the free version, but probably still, but pay your $10 a month, whatever it is. And that photo will come out beautifully lit, oriented correctly, and, softened so that it's appealing.
Totally.
There's no
and then you can stage it too.
Right. With one click.
Yeah, with one click.
Yeah.
And you never would have staged that unit before.
No.
But stage photos do so much better.
Yeah. We used to pay hundreds of dollars for subscriptions for software that did it for us.
Yeah.
And before that, we used to pay $20, $30 an image for virtual staging.
Yes.
And now it's
Or you'd have to go on Fiverr.com
Yeah.
and pay somebody to stage it for you.
Yeah, you find someone,
a graphic
across
designer
the world to do it for you.
Yeah.
Yeah. So it's a no-brainer now.
Yeah, agreed.
Yeah.
I'm doing the same thing. If I've got a vacant bedroom, I'm staging it on Gemini, Nano Banana,
Yep.
ChatGPT.
Yep.
I'll play around with different ones.
Yep.
And also editing photos, to your point. Another thing Mike DeZormo was doing that I started doing as well is it was wintertime, but he had some properties that
Yep.
were summertime.
Yep.
So you put snow on the ground and everything because you always want it to match the season.
Right.
So that it looks like a current rental.
Yep.
So I have a couple places where I'm like, hey, give it a light dusting of February snow.
Right.
Yeah,
Cloudy day, make it a sunny day.
I haven't thought of that one. That's a great idea.
Yeah. Your lighting isn't great. Fix the lighting. Yeah. It'll actually throw fake lights into the unit.
Yeah.
And the other thing is if you know that your unit needs a bit of work, use those tools to figure out what looks good. Right. And so if you want to play around with the hue of the lighting, play around with that virtually. There's no excuse to not use the AI tools out there anymore. There's some crazy in-depth ones, but even the basics will help every landlord.
Yeah. If you're mid-reno, you can put appliances in the kitchen that aren't in there yet.
Yep.
Done that on a few.
Yeah. If you've got a tenanted unit and stuff is everywhere, one prompt, remove all the garbage in this unit.
Yeah.
And it's gone.
Yeah. Cool. Thanks for bringing that up. That's a huge point. You're going to be at the Your Life, Your Terms event on Saturday, April 18th.
I will.
Yeah. Cool. You've got the crazy funky booth with the seats.
Yeah.
You can't miss Hart.
Yeah. If you're tired, come sit in the fuzzy chairs and hang out and talk rentals. Yeah. We've got a free rent estimator there as well. There's going to be a bunch of giveaways. So lease appendices, clauses for your lease appendix, a lot of move out and move in inspections. Again, things that people should be doing as standard. But all of the basics that you should be using, we've got available for free.
Okay. Awesome. Yeah. And if anybody wants to reach out, what's the best way of doing so?
Yeah. Just go to Rent Panda, hit the contact us button and give us a shout. It'll probably be me giving you a call. And anything from leasing to property management, paralegal help, software, or just advice with the rentals. We love to just chat with investors.
Across Southern and Northern Ontario.
Across all of Ontario.
All of Ontario.
Yeah.
Okay.
Yeah.
Where do you stop?
If you go north of
Past Thunder Bay.
Yeah.
Kenora?
We've done a couple in Kenora, but we kind of shied away from it. So generally the way that the model works in reality is we have people placed across the province and each person covers usually a 2-hour drive.
Got
So
it.
100, 200 kilometers. So if you are in the very peripheral regions in a very, very small market, we may not be able to service you. But in the large majority of markets, 98, 99% of the rental population, we can service.
Yeah, cool. Wow. That's awesome, man.
Awesome.
Hart, always a pleasure. Thanks, man. You always share some great stuff, so appreciate you coming in.
Appreciate you. Thanks for having me out.
Cool. Thank you.